There's a lot of uncertainty in the world right now, especially with regards to the economy. You can especially see it in the real estate sector. People are unsure whether or not they should buy that next property or buy that new home. And it's definitely dampening the activity in the industry. So I'm going to try and provide you a little bit of background on what is causing this uncertainty and where it may lead to, or my thoughts on where it's likely to lead to. I'll try and spit this out in as few minutes as possible, so hang in there. So, the US has been running an enormous trade deficit for many years, many decades, and it is unsustainable. This cannot go on forever. If it's not dealt with now, it's going to end up in a severe global crisis of a way bigger magnitude than what we're seeing right now with Trump's actions. So Trump took it upon himself and his administration to try and deal with it now, as opposed to letting it get worse and worse in the years ahead. And that leads us to the trade tariffs. Why is he doing this? Well, he's trying to fix the trade imbalance the US has with the rest of the world. And let me explain why this is a bad thing. So when you have the reserve currency of the world, which the US dollar is, the US dollar trades at a high premium, or premium relative to a lot of its trading partners around the world, which then makes US imports less expensive. It increases American standard of living. But what it does is it rots out the manufacturing sector. Over time, America is full of goods, plastic goods from other nations, and they're heavily indebted to the rest of the world, more or less weakening their financial profile over time. And this is not good for the financial strength of the US, because what the foreign countries do with the US dollars they receive for selling their goods to the US, they take those US dollars and they reinvest them in American securities, stocks and bonds. So over time, they become the owner of US assets. And what does America have? They have cheap plastic goods. And their trading partners more or less own their assets. So more or less selling themselves out from underneath them. As you can imagine, this is not good long term for the security of the US and the financial strength. So they need to fix this. And how do you do that? You need to somehow reorganize the trading arrangements with the US and move the US dollar away from being the default reserve currency, or as I should say, the default trading currency of the world. And this cannot happen without some ripples in the global economy. Hopefully not some major fractures, but that is definitely a risk, which is what we're seeing. What sort of fractures am I talking about? Let me explain to you. If there's a foreign country that issues US dollar denominated debt to another foreign country, this happens all the time. Foreign nationals have about $18 trillion in US dollar denominated debt. When country A trades with country B, both of them are not trading with the US, and they do it in US dollar terms, one of those countries is indebted to the other country in US dollars. In order for them to service that debt that they have, they need US dollars. If they're selling goods to the US on a regular basis and they run a surplus with the US, they're going to have a constant stream of US dollars coming into their country, and they can take those US dollars and they can use it to service that US dollar debt that they have. But when all of a sudden there's a fracture in the trade of the world, is what we're seeing now, there will be some parties or entities that all of a sudden are short US dollars. They're going to have troubles servicing their large amounts of US dollar debt. That's what you call a dollar shortage. And then there's a squeeze on US dollars. So it's not so much that, people think the US dollar is great and everyone wants to invest in it, is that there's a lack of them in the economy. And so people are rushing to get a hold of dollars because they need to make US dollar debt payments. And that's usually when the central banks will stop in and create swap lines between itself and other countries so that they can create liquidity into the system to keep it from crashing. Because what would end up happening, in an attempt to try and service their US dollar debt, they're going to start selling off all the US assets they have, treasuries and equities. And that's why you see the stock market and interest rates on US bonds spike higher and the stock market crash when you see there's a crunch on the US dollar or dollar shortage. So this is just one example of the seriousness of changing how the global economy trades It's going to have massive ripple effects. So the key is to try and do it in an orderly fashion, but you need to do it in a way that actually is going to have meaningful impact. It's going to actually make some major changes, because some major changes are needed. So it's kind of a balancing act between being able to force through major changes without breaking the system. It's like kind of trying to change a major part on an airline as it's flying through the sky without crashing it. So that's kind of what's going on right now. And where does that lead us to? And what does this mean for people's investment portfolios and their outlook for the long term? I believe that this is going to create stagflation for us long term, the next 5-10 years. So, we're going to be facing higher inflation, slightly higher interest rates. There will be periods when the economy will look really bleak and they'll have to bring interest rates down. But then overall, we're going to be facing higher interest rates than we've seen over the last 20 years. On top of that, I think that there's going to be the assets that are going to outperform are going to be hard assets: gold, Bitcoin, land, commodities. Those are the assets that you want to hold, because as the US dollar becomes less and less a reserve currency, they're going to move away to other asset classes to have more of a balanced global reserve. All right, everyone, have a great day. Hope this helps. Take care.